Hey Scott, thank you. Jamie, how are you doing, buddy?
Doing well, Andy. Happy Thursday.
Yes,
Interesting
yes.
market today. Interesting market to say the least.
Well, yeah, yeah. You know, I've been kind of holding on to that little bearish. I can't just kick that last little bearishness, and I think it's been obvious in these webinars as well. You know, but we'll get into that here in just a minute. Hi, everybody. Thank you for joining us today and taking time out of your schedule. Got a little treat for you ones that do have the software who are subscribers. Another little multi-strategy window to share with you today. So we'll dive into that in a minute, but first let's take care of the legal disclaimer here. Guys, you're going to hear a lot of chatter on here about ideas, setups, stocks, and things like that, but nothing that you hear should be taken as investment advice. Okay, me and Jamie are just kind of kicking around our cool software and showing it to you guys and giving you some ideas of how to use it. But once again, if you are seeking advice, you know, you want to seek out somebody who carries a license like a stockbroker or a registered advisor. But we are going to have some fun today. And, oh, I think I may have, let's see, there we go. Yeah, we're going to have some fun today. And before we do, let me tell the guys who are in here that are going to be seeing the software for the first time and that we have them in every webinar. You know, it's going to seem daunting if it's the first time to see it, but we just want you to know the incredible amount of support and education that we offer here at Trade Ideas. It is second to none. And I'm going to go over a few things here for you. We do have a pretty much a webinar Monday through Thursday, every day at 5 Eastern time. It's Jamie and Steve on Monday, myself and Steve. You don't see it up there, but that's the Trade of the Week webinar on Tuesday. That's the one you have to subscribe to to get the email. And then Wednesday, you got our CEO Dan Merkin and our CTO Brad Williams, or he's kind of performs the COO function too. And then of course the trading studio now with me and my good friend Jamie. Tomorrow we have a Friday support session, and this is a great place to come for any questions that you may not have gotten answered during the week. And this is also available to non-subscribers. So if you are out there kicking the tires and you want to see so much more of the product, come to that 3-hour session on Friday. It's just an open forum Q&A, and you can learn a great amount of info about the product. All right, let's go on to more. We don't stop there. We have what we call TI University. We used to do one-on-ones, but we just got too big to do one-on-ones anymore. So what we've done is we've taken our expertise and put it in a little classroom using the same format as we're kind of using today. Starts at on Mondays, and this is the 12 Eastern time. This is 12 Eastern time every day, Monday through Thursday. We start at Beginners 101 and just kind of graduate to each class until the very end when Jamie teaches the Advanced 401 class. And it's 6 hours worth of education, guys. So do get in there. If you're new and you haven't been in there yet and you're still having trouble with the software, come in there, let us work with you. I can promise you after going through TI University, you're going to have a really good grasp of the software and how to use it. And you're also going to find out it's very intuitive and can help you profit in the marketplace. And also, if you've been around for maybe a month and you're rusty, or heck, if you've been around 6 months and you want to take the class, you can. Just got to make sure you register for each class. And you can go to our homepage, trade-ideas.com, and just go to the training, look for training in the footer section and just click on it, and you will come to the TI University. All right, Interactive Brokers, we have kind of a semi-partnership up with there where you can basically take our premium service and hook it up to IB using our Brokerage Plus. And what this is, it's a module, and if you're really good at writing strategies, you can hook those strategies up to trade automatically with IB. A lot of people, this is growing more every day. It's still in beta, okay? As long as it's in beta, it's going to be free. And I'm assuming that you'd be grandfathered, but don't quote me on that. I would think so. Anyway, if you want more information about that, go to trade-ideas.com/beta. All right, let's look at the agenda for today. We're going to talk about the market as we always do, and then we're going to talk about the Holly recap. It was a tough day for trading in general, but there's some, you know, you know how we talk about using Holly as a market barometer, and so I was very pleased with what I saw from Holly today, and I'll discuss that in a minute here. Uh, uh, but anytime you get these open market opens slightly or down, and then the biggest move is the first 15 minutes of the day, and then the rest of it is kind of chopped. That's kind of what we saw today. It makes difficult for trading for everyone. And Holly, although she didn't get destroyed, I mean, it was just after that first move is kind of a lot of slop back and forth. But anyway, let me back out of this right now. Oh yeah, and then I got a new multi-strat based on Fibonacci's. This is on a daily Fibonacci pattern. So I'm going to show you an easy way to build. I'm going to actually share it with you, make your job easy. Anyway, we'll talk about that when I get there. Let me back out of this real quick. And let's pull up the old handy dandy chart here and put it on the spies. Okay, well, you know, guys, we've kind of been seeing a couple of different markets lately, and we've discussed that ad nauseum in here, really. I mean, when you talk about the Qs over the last month, going to a breaking out of an all-time high, looking very strong, IWM, breaking out, looking very strong. But then you look at the diamonds, and that's just nothing like what we're looking at now. It's below every major moving average except the 200. And really the spiders, you know, it was making an effort, but nowhere near, you know, at this peak over here. And you know, I keep going back to, it's like, gosh, I'd like to see the financials, and I'd like to see the spider, you know, IWM leading the charge. It's just kind of hard to get behind, you know. You know, I would rather get behind something. The Qs, that's a different story. Obviously, they can lead the charge. Tech heavy. NASDAQ stock's doing very well, but the weighting in that kind of scares me, because let's face it, five stocks make up about over 40% of the Qs. So you can have some real deterioration in the Qs, but as long as those 5 stocks are doing really well, it's not going to reflect in the overall averages. But the spider, that by far, this is the best barometer, you know, as far as what the eternals or internals, I should say, are doing in the marketplace. You do have, it's more equally weighted. And, you know, we got up here, last webinar I talked about this pivot level. Could we make it through there? And I talked about, if we do, we could break, you know, go to this level real quick, kind of like the Qs did. We couldn't even get up and touch it. You know, we sit there for 4 days, just kind of going sideways. And even though these are all green bars, like Steve talked about on Tuesday, they were still down days. Okay, and at the end of the day, when you come home from work and you're looking at the final numbers, it's still going to report a down day, even though the intraday action was up. And then yesterday, it kind of just a doji day, and then now we kind of rolled back over. This is still a critical level here, and we can call this a pivot level, and because you have several points there. It came down, bounced off of it, and now we tried to hold on to it again. So we'll have to see what happens. I'm still concerned, you know, about the XLF. And it's kind of irritating the way these things trade. It's because yesterday the market, man, there was kind of, IWM was roaring, Qs, I looked at Facebook, Amazon, Netflix, just all ripping. And then I looked over at the XLF, and they just going straight down all day. And then today you get a market that's ugly, and these dig in. So I can see the support here, and I can see what it's hanging on to. I think this is a level you really got to pay attention to. We broke through it going back over here. So this is a critical pivot. If we do get below this and start, you know, breaking down in the XLF, I think you got to watch out below in pretty much every sector. I really do. And so that's why I have been clinging on to a little bit of bearishness, because I'm still seeing the financial struggle. I'm still seeing the Dow stocks and the spiders, you know. I know everybody wants to get out there and cheer on Netflix and Amazon, but there's much more to the market, you know, than you know, Netflix, Amazon, and Facebook. So we'll see what happens. But once again, I'm still, you know, I'm not saying this is by any means a bearish tape right now, unless you want to consider today's only action. But I'm not seeing your typical strength associated with a broad range market rally, and that could come back to haunt us. And time will tell. But let's play out. I mean, I think where I'd really advise people like this are the long-term investors who may have been in the market over the last 8-9 years and just really banked a really nice percentage gain. This is where it comes to me. It's like the risk reward is just not there. I know you get accustomed to those 10%, 15% returns every year, but every now and then it's nice just to, hey, it's been a nice run. I'm going to pull some off the table, maybe keep a little bit in there and see what happens. But to me, the risk reward, it's dangerous right now. So that's just me personally. Jamie may totally have a different opinion. I know Sean does, and but for trading, if you're swing trading or obviously day trading, no, you can dive in as much as you want. I just on the longer time frame, I just don't see the risk reward there. All right, Jamie, you want to get your 2 cents in here?
We got technical and then we got underlying fundamentals, right? And the fact that the NASDAQ 100, that those FANG stocks carry so much weight, I mean, come on, that doesn't seem, well, prudent.
Fair. Yeah.
Right? I mean, it seems crazy, right? But that's the world that we live in. So, I mean, the FANG stocks have been dragging the market up. But of course, charts will be charts, right? Technical analysis is technical analysis. And right now it appears we're still, in the bullish phase. We're coming down to the bottom of this little channel. And that's why I was kind of really surprised to see the market not only come down like that, but then, that little failed bounce that we had and then set those new lows. So, being in the summertime, not officially, but close enough. I mean, yeah, if we don't bounce up or gap up tomorrow and we start edging down into that next level, well, then I'll start to be concerned about more downside action. But,
Sure.
I guess we'll see what happens.
Yep, and I'm pretty much right there with you. I mean, nobody in their right mind is going to look at this and say, "Ooh, that looks bearish." No, there's nothing bearish about the Qs. There's nothing bearish about the IWM. It's just not that broad-based, rally. Especially when I take a look at the diamonds, and the spiders and the financials, I'm just saying. Once again, I'm sticking to my little. It's not really a side bet, gentleman's bet, I should say, with Sean. That I still think we're going to see lows in February on the spiders. Now, I'm not talking about the Qs before we see highs, our February highs, but we'll see. We'll see. But you're right. There's nothing bearish about any of these charts. But I'm just throwing a little caution to the wind, I should say.
And hey, I'll agree with you. There's a lot of uncertainty, and the financials that you're referencing, those are always typically. It's like we're having a lot of conflicting signals. You got IWM doing its thing, and you got other sectors that you thought would be going along with this and slumps. I guess it's a powder keg of
it is.
Sports, and when it's going to blow, don't know.
No,
just a matter of
we know it will at some point, but when we don't know. All right, that's enough of that, guys. Most of you in here are probably better understanding those longer term charts than I am. So let's dive into Holly. That's next on the docket. And before I turn it over to Jamie, who will break down some trades and look at some, maybe a couple of winners and maybe a couple of losers. One thing I can say about it is the directional bias today. I mean, so we talk about all the time, because let's face it, most people like to go long. Most people like to trade to the long side, and where Holly can really help you out, first of all, I always encourage, sitting the first 15, 20 minutes on the sideline, 30 minutes if you can. But I'm not going to pull up all the strategies, but trust me, if I had to guess, Jamie, I'd probably say there was probably about 80% long shorts today, and maybe more.
Yep.
I mean, look at all these.
That is
Yeah,
correct.
yeah, could be even 90. But the point I'm making is if you're watching this market and you're watching Holly, because remember, first of all, she came to the party. When I say that, for you new people, let me explain what happens. She has like 45 strategies that we give her, and then she takes these and she runs them through what we call the combine, and she takes them and optimizes them and back tests them, and through all these different scenarios and parameters and settings, and then whatever makes the cut. And how you make the cut, you have to have a high enough winning percentage and a high enough profit factor based on the back testing. So when she comes to the party with a lot of shorts, and in her hopper, she probably has, I would probably venture to say, 70% long strategy. So when you see a lot of shorts, that means a lot of these are setting up. In other words, they're making the cut, which means probability is saying, hey, you might want to keep an eye on the short side because all of our signals are, are optimized, and it's pointing down. It's pointing to the short side. So you can look at, you can look at the strategies that make the cut, and then by all means watch the trades as they come out in the morning. And when you see just one after another shorts firing off, and you may be over there sitting in some longs, or maybe you're thinking about going long. Maybe you say, wait a minute, look over here. This little tool over here, this artificial intelligence tool, is not seeing any setups for the long side. All of these shorts are going off, and like I said, I'm not going to pull up each strategy, each segment, but Jamie will do more of that here in a second. So anyway, use Holly as a gauge. Now, I will say this, and I think all of you know, shorting's a different animal, okay? And when you're looking to pile on momentum to the short side, and you get it basically all in the first, let's say first 30 to 45 minutes of the market open, and then the rest you get this choppy whipsaw back and forth action. It really is tough. I mean, that's why there was a lot of stop hits in Holly today, just because a lot of elbows are being thrown in the marketplace. And that doesn't mean we'll take these. I know Michael and Noss will be working on them, fine tuning these things, but really, if you look at the performance, and I'm not going to pull them up, but right over here, you can also see it now in our channel bar. It's not that bad, when looking at what the market did. But I just kind of want to give you another way to use Holly, just instead of just looking for some great trades. And don't get me wrong, there was some great trades today, but there were some ones that were not so great. And Jamie will probably break it. I'm sure he will. He always does. Break it down better. And if you want to go ahead and take over the
yeah, no worries, Andy. Think about the plenty to go around these days.
Oh yeah.
All right, so just let me know when you have eyes on there.
Sure do.
All right, so hold on, my GoToMeeting's giving me a fit here. Okay, there we go. All right, so Holly, 3 Hollies now. Those days where, 15 minutes into the open, look, this is the first 15-minute candle right here of today's session. Interestingly enough, as far as the overall move of the market, I mean, my compare counts, when I looked at these after 15 minutes today, I'm like, well, okay, we'll see what happens. And of course, this is the first 15-minute bar. What did we do shortly thereafter? We took this nice little slide down, a couple of bumps, and then retested the lows again. So one would have thought that, looking at the amount of shorts, and if we sort by time over here, when we saw Holly piling into these longs, and what we're doing right now is we're looking at Neo, but the other ones were short, maybe not quite as short as the Neo version, but I mean, I'm sure I'm not alone here, Andy. I mean, I was thinking, well, probably going to make a nice little pile on all these shorts.
I thought the same thing.
And that's not what happened, which leads me to believe further that we're close to that little bounce area, right? Mm-hmm. And today was just one of those days, like you said, lots of elbows being thrown, right? Hey, I'm in the money. It's looking good. It turned and burned. Now I'm flat, maybe losing a few cents. Oh, let's hold them and see what happens. and
Can I
nothing.
jump in and make one? Because you made a very good point there, Jamie, and I just
Yes.
want to reiterate that. And that's another way you can use this tool because, like I said, Jamie and I were talking on Slack and the other fellows, and we're thinking, oh man, we're going to bank on this one. And this is, maybe 45 minutes and an hour into the market. And if you see the spiders just continuing to go down, and you're watching Holly and all these shorts, and the P&L's not really moving like it should, like Jamie just said, that could give you a real good idea. Hey, might want to watch the market here. We could be getting ready to have a bounce because all these shorts that she took, and remember, they're optimized. They're not following through. So I'm glad you brought that up, Jamie. That's a very good point.
Well, so I mean, you summed it up perfectly. Lots of elbows being thrown. So you could have been right 2 different times today, and still came out, barely intact. Maybe losing a little bit, or just having in one of those days where you're like, I was right 2 times, but I still lost, right?
Right.
By that is, keep in mind, we got all these shorts being opened up between 30 minutes after the open and 20 minutes. She piled into all these in that 20-minute period, right? They don't work. Well, they work. We got above water for just a little bit, as we can see from our equity curve here, and then whoosh, and no recovery, right? So at the same time, during this period right here, 7:45 is where we're going to put that little wick bottom in, and guess what? Everybody's like, well, I'm looking at my daily here. I mean, it's the summertime. There's no huge news other than the Amazon state tax, but guess who's going to take the hit on that? Me and you. Amazon's not going to, it's probably not going to, well, it could, and I don't even want to go down that rabbit hole right now. We're talking about this, right? And so everybody's like, okay, well, now I'm long either the SPY or the SPXL, and hey, I'm happy. Ooh, we got the bottom. Well, a lot of people that I talk to are like, I'm setting stops, getting out of here for a while, I'm gonna come back, and look what they came back to, right? So Holly piles in long, doesn't work. People get piles in short, doesn't work. People that I was speaking to, all throughout the community get long here. They think they've, gotten in a really good position here. And then, what happens? Not only do we come back, one more little gasp, and then back down here. So it was just a tough day, no matter how you slice it or dice it, right? And I'm sure there's there's a lot of shaking heads out there. I don't know if they're going up and down or side to side, probably both. But, that's just my take on the overall action for the day. But now let's just talk about the stuff we usually talk about with Holly. As Andy was saying, a lot more losers than we're used to seeing with Holly. No matter which version, if we look over here at the toolbar or the channel bar, AI1, 76 cents up, this one's down 97, this one's barely scratched 19 cents in risk off mode. But as you said, many more losers. When we do look at the losers here and we look at the risk off reasons, on these reduced risks, Holly bails for a 5 cents loser here. Turns out it would have ended up losing 43 cents. So that logic is performing well today, even though it's a losing day, which they come. It doesn't matter who you are, what system you're using, we will have losing days. On this one, a reduced risk of 21 cents, where she would have lost 37 cents, right? So as far as the losing goes, she's losing well. We did have several that actually worked. So this one, the SUP V, would be a perfect example of a risk on trade if you were in this trade today. Beautiful entry on Holly right here, and a timed exit, right? Downward dog, centered around a 60-minute hold time. So this one didn't even throw any elbows whatsoever. It just cooperated right off the bat, and we can see Holly plugs out of a timed exit after that 60 minutes, just doing what she's supposed to, and grabs her 23 cents, getting out somewhere right here. Now, we've gone over this many times. The best way to get used to interacting with Holly in a risk-off, risk-on basis is on a trade-by-trade basis. Simply put, we see Holly pulling the plug, taking her 23 cents here. We can always do a little bit of both, right? If we feel really confident and the market's with us and everything's firing on all pistons, hey, do the whole lot. if it looks like a good chart, right? We're in a good chart and things are working, do the whole lot. But if you're uncertain, especially when you're new trying to interact with the system, do a little bit of both. You get into 100, plug out a 50 shares with Holly when she's on risk off. If the chart looks conducive, which boy, this one sure did, we're still in the money, getting this little sideways action. We break down, go further. I mean, this is just a classic, sell program. Could have been a market maker in there actually today as a human, but just a real mechanical downtrend here on this one. So big difference between 23 cents and 75. We got 55 cents in there, or 52 cents, I should say, in there that you could have captured. And of course, maybe we'll top tip things from every once in a while, but even if we were able to pull out an extra dime, 15, 20 cents, that is significant on a cumulative basis over time. So great example of a trade around, or excuse me, a risk on trade on SUP V. Box L here, I believe, is a pretty good example of a trade around, right? Now, usually don't see all of this happening in one candle, and I believe I'm still on, yeah, I'm on 15-minute candles here. So, wham, this little thing just took off as it broke here. Don't know if there was news out on this guy or not today.
Looks like it, didn't it?
Good entry, bad timing, right? Or good signal, bad timing. So, this guy's already passed. We get short here. Holly recommends the short, and then what happens? Just whammy, right back up. Perfectly, not perfectly aligned, but just, gets that good lift through there, stops us out. So the way to interact with her on a trade around is when you see her down or stopped out. Pretty simple. All we do, assuming it's still above the entry line, is we come in here and we set that price alert so that if it comes down from above, we want to go short and notate it. That way we take this pass, this second pass through here on the downside, we get alerted, and of course, sometimes it works, right? Especially on one that's real extended like this, and we see this bar, it just looks like a fade the VWAP, 3% divergence for a standard deviation play. And if you've ever tried to play those, you know that this is kind of the name of the game. You're very rarely going to pick them at the top like this. So you have to be prepared to kind of scale into those types of positions. But hey, not for the faint of heart. The exact opposite of that is trying to pick bottoms or catch knives. Looks really good on the charts in retrospect, but in real time, whew, it's like trapeze without a net, right? But, a lot of Holly plays don't look like this, but this one did. So a good example of what we might call a trade around when we see Holly get stopped out of something.
And another thing too, guys, I want to say, just because I've traded to mega bear markets and I know what it can do to traders, so a lot of times it's all about capital preservation during that time. I'm not calling this a bear market, but anytime we have a bearish tape like we had today, it just brings this back to mind because I know how difficult it is. And when you do get in a bear market, you can have days like this for months, and so and sometimes maybe a year. But so what you want to do, it's a different game, because what happens is when you're shorting, you're kind of going against the populace. Okay, most people like to go long. All right, so you're kind of you're going to have more stop hits in Holly. It's just the way it's set up. So that's the shorting game. So what you might want to do is just even if you have to cut it in half. So in other words, what you typically play on the long side, try just cutting it half on the short side, and then giving it more time, because a lot of times it's all about timing when it comes to shorting. But the payoffs can be huge when you're right. So don't worry about having to press up and trade enough size to make enough profits, because what you don't make on the size of the trade, you're going to make up on the price action. So just give that a try. Just if you're experimenting around with shorting, just even if you do a quarter size, because you're gonna get jigged out a lot. You're gonna get stopped out a lot if you're trying to play the same side as you do on the long side. I've been there, I've seen it, and plus give it more time. When it does break for you, ride it for a long time.
Exactly. Having that smaller share size, heck, even for new traders going long, not a bad idea. A lot of people, just have the misconception, well, I got to get in there and make money. Well, of course, that's why we're all here. We don't do this for philanthropic reasons. But, having a small enough position, or a position which is sizable for you and your account, and letting that thing do its thing, I forgot who mentioned this earlier on Twitter a few weeks ago, something to the effect of, if you can't stomach the red, you'll never get to the green.
Yeah.
And there's a certain amount of truth to that. Depending on what type of trader you are. Very few people out there are in the money on every trade immediately, no matter how good you are or how long you've been in the chair, right? So trading size amounts that aren't going to have you pulling your hair out, probably a pretty good idea, especially on the short side. Now, Andy, all this talk about shorts, and you see this was all short NEO today, with the exception of one long trade, and look who it was. Look who shows up. Look who shows up. Good old dry ships. Especially in a market where everything is getting pretty much beat up today. I mean, I have to chuckle, not only because it's dry ships, but just how gorgeous this call was. I mean, look at that. I mean, that's a Jamie special right there. I mean, nice, range break, sneaking up, low risk, not a big energy expenditure leading up to this. And by the way, brought to you by Holly from Little Big Guy. Came into the play, or the day at 62% success, only one trade, and boy, what a beauty it was.
It sure was.
On this one, she just pretty much, pretty much pegs it pretty good. 50.
Look at that percentage gain too.
10%. Bam. 10% getting out. What was her exit?
That's if you got out at the
33.
That's if you got out at the close and not, up there somewhere in that range above 6.
Yeah, so it was in this candle right here, because that's a 1230 to 1245 bar. So I mean, just a gorgeous little trade in a sea of red. This one gets dealt. So yeah, we're at 55 cents at the close. So she got out somewhere in this area right here.
Yeah. Okay, I just now saw that. Yeah.
Not too shabby. That is the one long trade from the Holly NEO, with all these other ones, which did a good job of managing her losers. Just more losers than winners today. P&L 19 cents. Risk on if you held everything 53 cents. But on the most conservative mode, 19 cents. Anywhere 20 cents plus or minus. I can always just call that a scratch with slippage and commissions and all that good stuff.
Do you have the risk off profit percentage in your chart down there? I'm not sure if you do.
Risk off profit
percentage. I don't know. Yeah, there it is.
There we go. Yeah. Mashed over here for some reason.
Okay. Yeah.
4.37%.
Yeah. There you go.
Pretty impressive. What? Look, hey, this kind of helps explain things.
Yep. Look at there.
And of course, this chart's so whacked out.
It is, man.
But that's an interesting little level right there that it punched through. Anyway, not to spend too much time on dry ships. We all kind of chuckle about it because how many years ago, Andy, was it? Wasn't that long ago when all these shippers went on those mad runs, right?
Oh, yeah. It was probably about 1 year ago. Yeah.
What's the other one? Ship? Is it Ship?
Ship was one. There's quite a few.
Oh, that thing didn't do anything today, right?
No.
So this was I think this was just pure technical aspects.
Eagle, you can check Eagle. EAGL. Oh, what happened there?
Is this it?
No, let's see, EGLE.
EGLE.
I think. No, Yeah, it is. Okay.
Yeah, it is.
Yeah, it's just dry ships, huh?
Yeah, so it seems to be an isolated incident today.
Hmm.
Oh well, I'll have to put that one on the boob tube and keep an eye on
There
it
you go.
tomorrow just for giggles. All right, just doing a little time check here, Andy. I better pass it back to you.
Yeah, you can do that. That's enough Holly for today.
Yeah,
Like I said, it wasn't all that bad. Just wasn't all that great, but it was a ugly day in the market, that's for sure.
it was just
All right.
back and forth day. That's right.
For all you guys that have been holding out for uh, a new multi-strategy window, I've just created one. And for you people in here that may be in here for the first time or second time or not a subscriber yet, what I'm doing here is I created this multi-strategy window actually yesterday, and I'm going to share it. That's the great thing about our product here. It's so easy with our cloud to share windows with other people. And I'll also kind of dive into what this is right here. It's a multi-strategy window, meaning that you can have more than one strategy in one window. In this case, I have actually 3 strategies in this one window. And what I've done, guys, I wanted to, I know a lot of people like Fibonacci's, all right? And we've created in here before some intraday Fibonacci pullbacks, but I wanted to create one based upon a yearly time frame, okay? And we have some great ways. You know, the old expression, it's so vile, but more than one way to skin a cat. but that's true here at. I remember the first time I told my daughter that, she goes, "What?" You know. But we.
Yeah.
But it's amazing how you can take our different position and range filters and create these incredible alerts. Because I can remember back in the day, I would have to draw my little Fibonacci lines on the chart and see where they are. Well, heck, I can just build me a window now just to alert me anytime a stock's coming upon the major retracements of a Fibonacci. And what I've done here, these are your major retracements. You have the first one is a 61.8. The second one is a 50% retracement. And the last one is a 38.2. Okay, so let's see how I created this. We'll just go to the 61.8 and we'll go to configure. I'm simply using a new low filtered, which means I'm kind of looking this for possible swing trading alert since I'm building parameters based upon a daily chart. Okay, obviously I'm probably looking for it's not a momentum trade. I'm looking for some sort of swing trade. So I just use a new low filter so I would not get every time a stock hit a new low. I wouldn't get it every penny. All right, so let's take a look at the configuration. Okay, very simple. I want stocks that are priced over $5. I want the average stock to trade at least 500,000 shares a day over a 10-day period. Position in your range. Okay, so what I'm trying to do, I'm using my position and range. I always talk about how powerful these things are. So what I want to do is I'm trying to corral that 61.8. So the way I did that, I put a minimum of 61.5 and a maximum of 62. Now I could have come in here and put 61.7 and 61.8. That would have worked too, but this one gives me a little bit bigger of a window to maybe catch them a little bit early. So that's what I'm doing. I'm bracketing that 61.8. And now you may be asking, well, why do you have position in 20-day range? A max of 5%. Let me just click on this show me button to show you what it says. The price is no more than 5% above the low end of this range. I want it basically close to a 20-day low. I probably can even take this down further because what I don't want to see, guys, is a stock. What I don't want is, let's say this, for example, is spiders, and so let's say it's getting close to its 61.8% retracement. I want to see it there. What I don't want to see is it bounce, right, and then come back, and get close to that again. So I'm trying to catch it because, or let's say the 61% retracement. I can't do my thing. Let's say it's up here. I don't want it to blow through and then come back and test it again. I want to catch it. I want to see it the first time. That's why I'm using a close to a 20-day low. Now, I think it's going to make sense when I start showing you these charts. All right, so that's the 61.8% retracement. Let's take a look at the 50% retracement. It's basically the same configuration. All right, the only difference is position and range. Once again, I'm corralling, I'm bracketing that 50% mark. So I'm going to catch it. I got to, I'm going to catch it once it gets near that 50% retracement. Everything else is the same. I didn't change anything else. And the same thing goes for the 38.2% retracement. Only difference is, once again, I got bracketing that 38.2 so I can catch it. This, guys, is a good filter. I mean, if you like Fibonacci's, this is going to be a great little multi-strategy, because what it's going to do is you can have this running, and it's not something that you have to catch immediately, because most of these stocks are not going to it's not like a momentum stock coming back and hitting a 10-period moving average and just busting higher. No, these are more slow plays. But if you're into position trading, this could be a very good strategy. So let's take a look. And I'm not sure. Today was a pretty awful day. I'm not sure if what we have in here. I haven't even looked at it. So for today, I looked at it yesterday, but I haven't got around to looking at it today. All right. So let's see if we can get a good example. Now, I do have ETFs in here. I did not put the formula in that to exclude them, because I want to see ETFs. I want to see, as a matter of fact, yesterday gold came through here, and it was right at the lows of yesterday. It started hitting this 38.2 retracement. So maybe this may be something to keep an eye on. Let's see, something we're familiar with. Well, there's Morgan Stanley. Okay, and that one, let's see, I bet you we got it before that one. No. Okay, so Morgan Stanley alerted you right here that, okay, it's on a 38, let me span that out, 38.2 retracement. Obviously, if we look at a year chart, we're going to see, if we go back over here, you would pretty much, your eyeball would tell you that's the low and that's the high. So now we're coming back and we're retracing that 38.2% retracement. I think I did that right. All right, let's take a look at another one. That's not the best one to look at here. 50% retracement right here. Okay, this is a good one. Notice my little arrows are taking a little bit longer to pull up. I don't know if I can get that new version. This is why we guinea pig them. I know my arrows are taking about, some cases, 3 to 5 seconds to pop up.
Yeah, I've noticed that too.
You noticed that too? Yeah.
Developer's version, yeah.
Well, this is a good one right here. Okay, this is a 50% retracement. Okay, if you go back and you look at a yearly chart, you would see that this is basically a 50% retracement. And got it right there early in the morning. 8:36 minutes after the market opened, you got notified there, and now you have a little bottoming tail. Maybe this is one you watch to maybe get a bounce off this Fibonacci retracement. For those of you who are maybe not familiar with Fibonacci's, it goes back a long ways. I don't even know who the people, but anyway, it's based upon sequences and kind of numbers repeating themselves over and over again. So I don't get me lying about how this all computed, but I know I've used them before, and they they amazingly will work a lot of times. Let's see. So that's a pretty good case. Maybe want to watch. This one kind of blew right through, but remember, guys, we're not day trading these. Okay, these maybe will give you some ideas of what to do, and what I like to do is marry it up with some support. Like when this one went off this morning, I may be looking at this chart and saying, well, looks like this may come down. I didn't mean to do that. How do you get rid of that? Just click on something else and come back. There we go. Maybe you want to, so I would marry it up to some places in here. There's Morgan Stanley again coming lower. So it's still below. It's 38 instead of 38.2 right now, but we're still getting the signal there. So I I would probably be more inclined to maybe, we didn't get a lot of them today, to maybe look at some of these 61. If you like playing stronger stocks, maybe take a look at that. Well, like I said, it's an ugly market today, so you're going to have a lot of them blowing right through. Let's take a look at this Honeywell. Well, Honeywell is pretty much closed right at it there on its 38.2 retracement. Lazy boy. Oh, that's a pretty good one right there. There you go. Did blast through the, this is what I'm talking about, trying to find some level to marry it up with on the chart. So if you do see that, I don't like the fact that it's through its 200-day, but you have some nice support here. Maybe this is one, you might want to keep an eye on if it does, hold this level and does bounce off this 50% retracement. It can be, and for a lot of you guys, it may not even be your bag. This is now this is pretty. So now you got the 200-day right there. You got a 200-day, and also you got the 61.8% retracement. So I would be keeping an eye on this. If it can hold that 200-day, and you have your Fibonacci 61.8 retracement there, this one may be one to watch for a move higher. Now, there's another one. You got your 200-day. You also have a pivot level right here. So this is kind of like the way I would use it. Marry up these pivot levels with the 200-day and your Fibonacci. So you have a lot of, a lot of reasons why this might hold support. Let's see what else we got. This one, you got a nice little pivot level here. This may want to come down lower, but you got your 61 point, so it may want to dive down to that level. So anyway, guys, I thought I wanted to share that in case some of you guys are into, or we're getting more and more people that are trying to get away from day trading and get more into position trading. As a matter of fact, Jamie and I. Nothing we're going to announce right now, but we're kicking around the idea of having a swing trading room. Debbie Clowney says, can you put the studies in the window? I sure will. Debbie. I will drop that. Let me do this right now. As a matter of fact, I'm going to grab it so I don't have to create it again. And just go here and share, copy all. And in the chat window, in your go to webinar, I'm just going to put the word fib because it's the only one I'm sharing today. And there you go, guys. And you will have access to it. But thank you, Waleed. Thank you. You too, Mike. Appreciate it. Thank you, guys. Yeah, it can come in handy. I mean, I think about the way I used to do things before trade ideas, and it's just like, gosh, you can just create these things just using, a little bit of common sense and create some really cool stuff to show you some levels of, Fibonacci retracements just simply by using position and range. And this does work on an intraday too. And honestly, if you're looking at the daily, this is going to work much better than the Fibonacci alerts that we have, because you have to use hours of trading, and who wants to go compute hours of trading over a year? But I guess you could. I don't know if that works. Well, theoretically it would, but I don't know. We probably wouldn't go back that far. All right, guys. Well, that's about it. If anybody wants Jamie and I to look at some charts, we got a little bit of time to look over a few charts. If not, I can always bring Scott in, but we'll hold out just in case there's some people out there that kind of want us to maybe look at a chart or two for them. How do you set up moving averages? Okay, I can go that for you real quick. It's real simple. Just go right click. Now you have to make sure you have you're not using version 4.2.5. You want to have 4.2.40. So if you go to help and you go to about and you're not using something at 4.0 and higher, you need to go to our website and download that. You can find it on our products tab. But really simple there. Just go to right click, indicators, find what you want. Let's say you want to add SMA. Then when you do it, make sure you come in here and you close that out and I already have, let's see, everything. Let me throw a 40 period because I have a 10, 20, and I'll just throw a 40 in there for. And you got to make sure your spacing is correct. Okay, like right there, I can see my spacing's not correct. Just make it do that. You can set color. Let me go with the yellow and just hit about a series of OKs, and it's in there somewhere. You just don't see the yellow very good. But that's how you do it. No, okay, yeah, you got to get the most recent version there, Pon. Go to our website, trade-ideas.com, and go to the products page. Okay, go to the products page and go to the betas. Okay, you want to grab the beta.
Yeah, and it's just a few scrolls with the mouse wheel down from the distribution version or production version. Yeah,
exactly. You need to go about 2/3 of the way down to find the beta. All right, real quick, I think I did see one come in there. We'll just hit these up.
Debbie was asking about, is there a way to see something that's coming back to test daily support?
Is there a way to see something is coming back to test daily support? Yes, you can create that. Unfortunately, Debbie, it's not something I can do on the fly right now, but here's what I would play with. I'd play around with the, maybe the position and 20-day range. And you can kind of bracket that, kind of like I did mine, to where, and trust me, we do have some more in-range filters coming. Getting a little frustrated with them because I thought they would be here by now, but we do have some more coming because I love those things, and I think we can create so much more once we get them, and they are coming. It just, we have a lot of other stuff that's coming too. Then got to get our priorities straight. But okay, let's see. I have a quick question. I'm trying to find stocks. Do this for me, Azil. Come to our support session tomorrow, okay? It's at 11 o'clock Eastern time. This is where we can help you build something like you're asking for. I just don't have time to do that right now, but come to that support session. If you can't, just just copy and paste what you did and send it to us in an email to info@trade-ideas.com. Scott will show you this on our way out today. So just remember that email and send your question there, and somebody will help you there. But hopefully you can come to that support session. That's the best place to get it done because you can watch and see how we create it.
Yes, indeed. If you can make it tomorrow, highly recommend it. Yep.
All right, real quick, let me look at CLNS. And yeah, it's kind of digging itself out of a hole, trying to. This action right here was a little bit scary. I mean, tried to gap up, and looks like out of that range and just got slapped back down. But since it's putting in a nice base there, you're still kind of in no man's land just because of this thing right here, this high going back over here. I don't know if you're already long or short or in it, Christopher, but it's one that I would be patient with and let it clear this level if it can, because other than that, you're still kind of in the middle of a range. I mean, if you're looking for maybe a swing trade or something like that, maybe it's not unwise to take something now and just with a tight stop. You got a well-defined level of support right there, so that would be my. Just make sure you don't have any, that's the kind of chart I like to keep track of the news, because that gap down scares me and you just don't want to be caught in some more bad news. These little stocks, once they've fallen this far, it's easy to look back and say, wow, this thing's, I can get this thing, maybe it'll go back to 14, but yeah, just be careful with it, because it's been down here for a while and it could remain down here for a while. All right, let me, I think I did have one more. Let me see. I think but I think it was a repeat. Oh, ENT again, Tony. All right, Tony. Yeah, let's be quickly on this one since we asked about it. Yeah, it's a couple of wicks up here. Topping wicks would kind of scare me. You do have this level going back over here that if it can get above, but lately we found sellers every time you get up to that level. Once again, I'd watch that fast line, that 10-period moving average, and if it closes below that, that would be my bogey to probably, think about getting out. But other than that, it's a strong chart. But anytime I get something around $3, I always have a red flag waving in the back of my brain. So, be careful, because I know there's short sellers out there just salivating for this thing to have its first big, red bar, because that could be the start of something, possibly back to whence it came. Yeah. Yeah, Tony. The market maker manipulate. Yeah, it can. I try not to think of reasons why price acts like it does, and just watch the price action, because it doesn't matter if it's market maker manipulation or if it's somebody dumping every last share they have, and they had a lot of shares. The price action is the only thing that's going to matter to your pocketbook. So. Yeah, I don't ever try to think a reason why something may be doing something. I just let the price action tell me what to do. All right, I think that's going to do it today, guys. You've been a great group of attendees. So thanks everybody for your kind words. I'm going to bring Scott in now, and he's going to march us out of here. Hang on, guys. If those of you who are not subscribers, Scott will have a discount.
Yeah, thank you. 5 ways to win in a post-BTFD market. So find out 5 strategies to keep in your trader's toolbox to help you survive and stay profitable. Just go to trade-ideas.com/ebook, and it's free. Plug in your email address, get an email, and it'll download right to your computer. Trade Ideas podcast, we have one every Friday, most Fridays anyways. Should have one up tomorrow. Make sure you're prepared. Just search for Trade Ideas podcast in whatever application you use to listen to podcasts in. Click subscribe and get the last episode, get the next one. We also have a discount code. It's good this month. Hot savings, all caps like you see it on your screen. That'll save you 15% off your first month or year of Trade Ideas. Subscribers who are on standard and want to upgrade, keep in mind, you can use this code to do the upgrade and save that same percentage on your first installment of your premium subscription. So just use hot savings on checkout. Any questions, email us at info@trade-ideas.com, or you can follow Jamie on Twitter at QuantBot, follow Steve Gomez at Today Trader. We've also got at Trade Ideas and some other handles. Facebook.com/TradeIdeasPro is the place to find us on Facebook. Make sure you like our page so that you see all of our posts and you get to share them with your friends. Thanks everyone. We'll have a recording later on tonight or tomorrow morning. Thanks Andy. Thanks Jamie. Oh, they will be an invite for tomorrow's Friday support session going out shortly, so stay tuned for that. And if you have any more questions, just show up and ask them. Again, thanks, guys. Thanks, Andy and Jamie.
Thanks, Scott. Thanks, everybody. We'll see you tomorrow.
See you tomorrow. Bye-bye.